Hey guys, welcome back to Results Junkies podcast. Moving back to warmer climates out of South Dakota. Strapped back into the chairs to talk about startups and all that's right in the world of technology. Mr. Singh, how the heck are you?
I'm warmer, that's for sure.
Be hard not to.
It was funny. I think I told you I forgot my jacket in Sioux Falls.
Well, you didn't need to tell me that. It was pretty evident when we stepped off the plane and, you didn't have a jacket.
Yeah. It was just interesting. I mean, I guess this is normal, but like everybody there was just walking around, I feel like in sweatshirts. It wasn't a big deal for them, and I'm just freezing my butt off.
Yeah.
You were kind enough to buy me a cool Sioux Falls or Startup Sioux Falls sweatshirt, which I think within about 5 seconds of me walking in the door that night when I got back, Dana commandeered. So I should have
assumed that. Yeah, I should have assumed that and gotten two. Yeah, that was a bad call on my part. I
opened my suitcase and she's like, "Oh, you got me a sweatshirt." I was like, "Wow. Okay, yeah, I guess."
Do you remember how many sweatshirts you pulled out of your suitcase for me?
I feel like I got 2 out of there for you.
Yeah. You know where the other one went. Yeah.
So you intentionally threw me under the bus yet again. Nice.
No, I didn't intentionally.
Nice.
I think I just knew what my wife was going to want. I should have assumed that your wife would want the same. So I'm just going to go ahead and apologize in advance for you not having a Startup Sioux Falls sweatshirt now, because I know you made the right decision and gave it to Dana.
The good news is I have one. I'm just not able to wear it. That's all.
No, your household has one. Yeah.
Yeah, that's right. That's right.
There's a difference.
Yeah. But no, it's good to be home. It's also good to be out though too. It's been a while since we have been back on the road. So yeah, it was good. But let me pause there. We can talk a little bit more about Sioux Falls. How are you? You took off again right after we got. You actually took off again like within 12 hours of us landing.
Yeah. And a funny story on that, real quick though, for folks who are just tuning in, show@resultsjunkies.com is how you email us. He is at Paulson on all the social media channels. I am at Pizza in Motion. We are on YouTube as well now. I'll throw a link to that in the show notes. You can watch us on video, as compelling as that may or may not be for you. And if you do have a moment, there's a link in the show notes as well to leave us a review and a rating on whatever platform you're listening to. And those are super helpful for folks to find the show and discover it. So the more people that watch here, the more we'll be able to keep Paul engaged for the foreseeable future, staring at the screen and talking to us. So we want to do that as long as humanly possible. So yeah, we landed at 9 something, 10 something.
Yeah,
like that.
Friday night at like 9, we got back.
Yep. So I got to my house at 10 p.m. Walked in the door maybe a little after 10 because I dropped you off, and I left my house at 10 a.m. And the interesting thing about that was, I'm trying to remember. I think it was on my way back. I think it was on our way back from South Dakota that I got the message from Matt Paulson from Market Beat, who was our guest last week on the show, where he said, "Just kidding, not going to Orlando this weekend. I'll be in Vegas." And so 24 hours after leaving South Dakota, or 26 hours after leaving South Dakota, I was having dinner with Matt in Las Vegas.
That's great. That's awesome. That's awesome.
Yep.
I forgot to tell you, actually, when you dropped me off, I didn't realize Dana was actually in the garage. She was going to come out and say hi to you, but by then you peeled off. And I was I'm not going to call him back here.
It's really hard to peel off in a 2006 Toyota Highlander hybrid, but in any way, shape, or form that I could have peeled off in that car, yes, maybe I did.
It's got those electric motors. It had some oomph.
Yeah. Well, I'm sorry that I missed her, because she is significantly more compelling to hug than you.
That's a good way to put it. Yep. I realize I'm not easy on the eyes. I get it.
Mm-hmm.
I get it.
No. So we got a couple things we want to touch on today if we get time for both. We also want to recap Startup Sioux Falls a little bit. We want to talk about Reddit's IPO and then some new legislation out of Florida that hasn't been signed as of time of recording, but that would ban anybody under the age of 16 from having a social media account, YouTube, TikTok, Instagram. I haven't read through the entire text of the bill, so there's some parts that are a little bit fuzzy just based on the synopses of the bill that I'm reading. But I guess first and foremost, I'm curious, I know we talked about it on the show sort of live, but after having a week to think about it, what's your opinion about being back out on the road, as you referred to, and then, what we saw and experienced in Sioux Falls?
Yeah. If I had to summarize it, I would say 2 things. I would say the first is that, one of the hard things about investing everywhere else is just staying connected. So thought number 1 coming back from Sioux Falls is that it's really hard to replace connections with email lists or anything like that. Like, in other words, you get a lot more out of spending a few hours on the ground, shaking hands and talking to people than you do by signing up for their newsletters and trying to like build a relationship. I think I might have said this in one of the previous shows a long time ago. Like, more than ever, I'm just convinced that in-person meetings are a great way to really strengthen a relationship, and online, whether it's Zoom or emails or whatever, is a great way to maintain it. So that's thought number one, is that, getting plugged in to a community is just hard to do unless you actually just go do it. And I think the second observation for me was that even though the bar has risen quite a bit over the years in terms of like what sort of traction is necessary to raise money, and I mean this with all the respect in the world, it still feels like a lot of founders are still struggling with this idea that, or somehow I'm getting told that they're going to get funded at the idea stage. I don't know how to articulate that better, but I feel like you and I have talked about this like at length, and many other people have talked about this at length about how much the bar has risen to raise money, and yet, and this is not a reflection on Sioux Falls itself. But it's just interesting to me that still to this day, there still remains to be a lot of founders that are being told, coached. Maybe I don't know who's telling them this, but like they're trying to raise money at these early stage idea stages or whatever. And it's tough, I wish somebody else would tell them this sooner.
Yeah. And I mean, there were some culprits. Well, I'm moving back to that in a second. So first off, I'm talking about being out on the road. I think like my biggest regret having, gone back out on the road with you at Sioux Falls is that we weren't recording this podcast when we were out on the road the first time. Because I think there were just so many different nuggets that I can remember from tour stops from, whatever handful of years ago it was, 6-7 years ago. And I can only imagine all the nuggets I've forgotten at this point and the things that we could share with the audience that would be valuable. So there's definitely a level of regret there being out, because like you, I really do value the in-person time. I think it sharpens my skills to be there and to be asked tough questions. Helps me think about the good questions to ask. And so I think if nothing else, Startup Sioux Falls was a good way to sharpen my skills and get back to, making sure that I'm connecting with founders in the right way. And, I think that there's something to be said for capturing some level of feedback leaving. And I think, we talked a little bit about this on last week's show, but I want to break down in more detail. Without going into company names, I think, I think it's fair to say that I saw 3 different buckets of companies from the companies that presented to us. And, let me know if you disagree with any of these. I think there were a couple that just, really weren't ready to fundraise. I think there were another couple that I thought were moving in the right direction toward fundraising. And then I thought there was one, maybe one and a half that had a business that maybe could go the fundraising route or could go the bootstrapping route, but seemed to have all the right pieces to move to the next step.
I would agree with that. Yeah, I would agree with that. I thought, I won't reiterate, but yeah, I would agree with that. There was those 3 buckets, and that totally makes sense. Absolutely.
If you erase the city name, I think you could say, there's a reasonable chance that Sioux Falls, like any other tech tour stop that we had the ability for us to walk out of that, funding a company.
Yeah, I agree. And I think, maybe one other thing I'll just say is that these accelerators or incubators that exist, and I'm using Startup Sioux Falls, I think that's the name of their accelerator program.
Yep, Startup Sioux Falls.
So, I think that these accelerator programs are what I would call the modern day business schools for these types of businesses. In other words, I think MBAs and stuff like that are really important when the dollars get bigger. Actually, yeah, I would just say that like, if it takes you less than $1 million to get your first customer, accelerators, I think, play a really important part of that. And if you need more than that, or your career is going to go corporate and you're going to be managing millions of dollars, that sort of thing, well, I think an MBA is probably the right way to go, like a traditional business school. So that being said, though, I think it sort of reinforces this idea that if you agree with me that startups or that accelerators are sort of the modern day business school for startups, particularly for ones that don't need to be, capital intensive to start up, then I think that, anyway, that was like another nice little reminder that those programs are useful. And how do you, we could probably do a whole episode on maybe talking about how to get more relevant sort of advice or relevant experience or something to these accelerators. I know we didn't talk about this in the pre-show, but this is particularly poignant right now, given that Techstars just announced they're moving their headquarters from Boulder to New York. I don't know if you heard that or saw that.
No, I actually didn't hear that. Interesting.
Yeah, so they're closing down a couple cities and HQ's moving and all that. So anyway, let me pause there. It was good to get back on the road. We've got a lot more this year that we're going to get out onto, but Sioux Falls was a good place to start it off.
Well, and to your point about accelerators and value, I remember having a conversation with a few of the folks that were part of running Startup Sioux Falls. I think Matt commented about how he was really excited that they had gone down this path, and I remember having conversations with them about conversations they had with companies that were in the cohort and how they had helped coach a couple of them on pivots and on ways to present themselves and things like that. And I think that clearly showed in the presentations, at least some of the presentations that we saw. So I think that's the overall value of an accelerator or an incubator, if you pick the right one, is to have your assertions challenged and to sort of like work the kinks out of the model before you get in front of investors. Because the kinks are going to get worked out one way or another. They can get worked out with live bullets or with dummy bullets, your choice.
Right.
So,
man, add that to the analogies that I never see coming from you.
Rubber bullets on this episode of the Results Junkies podcast.
I love it.
All right, so let's talk about Reddit. So Reddit appears to be approaching their IPO filing here shortly, and the articles that are out talk about how that they saw revenue growth in 2023, but that they still have fairly sizable losses, $90 million in losses in 2023. And while I don't think that there's any documented proof of this, that there was a round back in 2021 that's rumored to have had a valuation of about $10 billion. So, it doesn't seem like that's where they're going to IPO at, if you will. But I'm curious to hear your thoughts. I know there's one point that you shared in pre-show that you thought was interesting, and I got a point that I want to make as well.
Well, I think that if you want a lot of unsolicited armchair quarterbacks and advice and stuff like that, you either need to start a business, have a kid, or try to go public. And then all of a sudden, everybody's going to armchair quarterback you. And I think, with Reddit now going public or filing to go public, certainly everybody's like, oh, they're losing money, they're losing this, they're losing that. And I get it. That's the game, I suppose. But on the flip side, look, I don't have any equity in Reddit, so I don't really have a, desire. I don't really need it to go one way or the other.
Right.
But I think from my perspective, somebody stepping into the public markets and testing the appetite for a new company going public is good because, I'd have to look at the dates on my own exits, but I don't think I've seen a distribution or a wire transfer back to us in 18, maybe even 24 months now across the portfolio. So, anybody testing the waters on the public side, could start that, train of opening up the public markets, but we'll see. So anyway, I'm curious to see how it goes. But it was interesting. As soon as you mentioned it in the pre-show, you were like very visceral in your own analysis. You want to talk about that?
I'm a little spicy, but I also wanted you to touch on the contract that they have with Google, because we alluded to this back in probably December. We were talking about some of the magazine companies that were suing the New York Times was suing ChatGPT, but Reddit is one of the companies that has found a potential model in selling access to their database to Google to learn against.
Yeah. So I forgot to mention that. So in the them going public or whatever, one of the pieces of info that came out, although you mentioned it might have come out sooner, is that Reddit's getting about $60 million a year from Google to actually let Google use Reddit's data in the training of Google's AI models.
Yeah.
Which I think is probably one of the earlier deals that we've heard about in terms of payment for the information that's going to get used in the models. So that, it'll be interesting to see if that precedent sort of holds when it gets applied eventually to OpenAI or or any of these other companies that are creating these models now. So also 60 million seems low. I mean, if you mentioned earlier that the last pre-money valuation was probably in the billions of dollars, $10 billion or something like that in 2021. 60 million for access to the data it just seems low, but
it's like it's like you're teeing me up. What a great segue to my opinion here. I think I would just say that, what's the most polite way to say this? If this is really the best thing that our ecosystem has to offer for an IPO right now, it doesn't really send a great message to founders on things like, economic discipline and stuff like that. Because, I mean, so Reddit's been around for 20 years. And
don't hold back.
Yeah, I mean, look, I mean, they're making almost $1 billion in gross revenue, but they're losing $100 million essentially. So, from that standpoint, I mean, I think that the thing I really struggle with here is, this doesn't really look like a successful model. Now, I mean, given you take somebody like Facebook and they're earning, whatever, over 100 billion or gross revenue of over $100 billion a year. This is clearly a different model. Reddit's not Facebook. It's a different sort of community. Harder to have, ad dollars against this sort of thing. There are some, I don't know the models, but there is some paid membership stuff there, and there's some advertising. But they raised over $1 billion in capital. So the preference stack is called $1 billion in capital. The company's, got gross revenue of less than that. They're losing 90 million. I mean, let's just say that they can have a remarkable year and they can make this business earn $100 million. So they can go from an $100 million loss to $100 million profit. That could be really good for Reddit as a model. The one individual specific company, making $100 million off of, call it $1 billion in revenue. But that's not typically the margins that we see in SaaS. And it's clearly not the models that we see for Facebook or Instagram or those sorts of companies. And so the issue I have with this isn't necessarily that they're going public. It's that this company got $1 billion in funding, and most of it came in their two most recent rounds, which were $300 and $400 million. And I think it just feels like at that point, after I don't remember exactly when those rounds came, but they were fairly recent. So 2020, 2021, something like that. After the company had been around for over a decade and still wasn't making a lot of money, we collectively still put, almost $1 billion in for a company that, I mean, do you really think that this company is worth, I mean, I know you don't play in the public markets, but I mean, a company that's losing $100 million right now off of $800 million in revenue without a really clear picture of how they're going to 10x any of that, is that company really worth $10 billion?
Yeah, I mean, I'm not qualified to, put prices on these things, but the way you just presented it just now, no, it doesn't seem like it should be. And that's the interesting part is it's going to be interesting to see how the market prices it, because the flip side of this is that, and I think you would agree with me on this, there's a lot of other companies that are sitting in the rafters just waiting to go public. I mean, you look at companies like Canva, for example. I think Canva, again, I say my disclaimer, I'm not a public markets guy, but
sure.
At the same time, Canva is going to be an interesting one to watch when it comes out, because it's got substantial revenue as well, or more than that anyway. It'll just be interesting to see how that plays out. But I guess where I'm going with this is that my answer to your question directly would be, no. I mean, based on how you described it, that doesn't seem like it's the right price. But I think it's going to be interesting to see how the market prices it. And what the market does is going to determine whether we see 3 more filings this year or 20 more filings this year. And either way, that's really exciting. And exciting in the sense at least something's happening.
Yeah, I think the issue that I have, and maybe this is me picking too much on the Reddit model, but when we look at this for just a second, you say, well, they had, $800 million in revenue and they lost 90 million. Okay. So, I mean, I looked it up. They don't have a ton of employees. They have a few hundred employees. But I mean, they don't pay moderators, which would be probably would be a significant expense. So I'm guessing most of their expenses are on the technology side because they're probably not spending $1 billion on 350 humans. So I just struggle like at a very high level to understand how they shift that model enough. Like it's not like they have 6,000 employees. They can like with or like I think Twitter had 10,000 when Elon bought it, and they cut 7,000. Like I'm not sure what lever they pull here other than being able to drastically increase the revenue. And you brought this point up earlier, like, well, the $60 million for the revenue seems light, for what Google's paying. And maybe those numbers go up exponentially because of the value of Reddit's database. I mean, it is a unique database for sure of information. And I think there are tons and tons of expert information that's shared on Reddit as a whole. I think what we're saying from an ecosystem standpoint, just to be clear, I'm not trying to pick winners and losers, but I think for this sort of a thing where a lot of people who invested in this company are probably not going to get a great return when it goes public, it still feels like it's encouraging this, bet big, raise a bunch of money for an exit. And I mean, the founders may do okay here. I don't know what share of the company the founders have, but nobody in the last 2 rounds appears to be poised to do well. So like it just feels like it just doesn't feel like from a sustainability standpoint, you can have these late stage investors putting in $700-800 million and get little to no return off that money.
Oh yeah. I mean, I'd be surprised if the latest investors are happy about all this, but at the same time, what can they really do? I mean,
no, it's not about what can they do, but like they're less likely to write the next check, which should inform the people looking for C checks and B checks and A checks and C
sure.
checks.
Yeah, absolutely. Oh, absolutely.
This should have downward pressure on everybody's round.
Yeah, no, I agree with that. I think look, I'm an optimist, maybe to a fault, or definitely to a fault, but I think the thing to think about here, or the thing I think to, recognize here is that maybe Reddit's decided to get off the venture treadmill, and now look, it's not good either way, right? Like they either need to, probably either need to go out there and raise another round now and from private investors. And that's probably, actually, now that I think about where I'm going with this statement, maybe that's what happened here. Maybe this was about picking like the less worse path forward, and when you have a $10 billion valuation 2 years ago and you're faced with a recap and, down round and all the uncertainty that exists right now, maybe it's less worse to just put yourself out there and see what the market does and just get off that venture treadmill entirely. Maybe that's the calculus here.
Yeah, could be. I'd be interested to see how this plays out. Yeah, because I think it's going to tell a lot for what comes next. And I do think that the overall structure of this deal and the way this pill is being swallowed, could have something of a chilling effect on people seeking late stage funding, especially in a world where interest rates are still, high, because that means that investors that play in these boats can source return elsewhere. As long as rates stay high, they can get 5% T-bills, 4% T-bills, whatever's out there. So they need higher returns from your company to stay in. So anyway, well, we still got a few minutes left. You want to try and tackle this new bill out of Florida and what we think it might, what effect it might have? I don't know that
we'll tackle it, but let's talk about it.
Yeah, we won't get into this. We won't get into all the semantics of the bill, especially because like I said, I couldn't find a copy of it online when I was looking. There may be one, soon, or there may be one I just missed it. But essentially the crux of the legislation, which has not been signed by the governor yet, is that this legislation would ban social media accounts for anybody under the age of 16. Now, the limit on this right now is 13 years old. So this would push the age up in the state of Florida to 16 for popular platforms like Instagram, TikTok, Snapchat, that sort of stuff. I was sharing with you in the pre-show that we had an investment in a company a number of years ago called Skit, and they sort of were dealing with I don't know if you pronounce it COPA or COPPA, but the child compliant stuff and trying to create sort of like, a walled garden where there was COPA compliant content in one bucket and non-COPA compliant content in another bucket, and that, young kids couldn't get into the non-compliant bucket, without going into any of the politics of whether this should be or shouldn't be. I think Like the tough part I see about legislation like this isn't necessarily what happens to Instagram or TikTok in the future. But if you're thinking about building a B2C business that involves some level of socialization, you now have to worry about where a state is going to draw that line with you. And are you going to be subject to this? And what does that mean in terms of market size? There are a lot of people between the ages of 13 and 16. They are very active consumers. They click on a lot of ads, all that stuff. And so I think this has the potential to have some pretty strong effects on existing companies that play in this space.
Well, yeah, I mean, it doesn't it depend. So once we get our hands on the paperwork or the draft, I think it really does depend on where the liability falls. Because if that liability is on I mean, you know this, right? But it's like if that liability falls on the companies and they need to figure out how to like get IDs or copies of IDs or signatures from parents, that is entirely different than if this is like just a bill without teeth, just designed to kind of like maybe hold parents more accountable. I don't.
Well, that's the only thing I'd say. Like that's why I think this legislation is different. There is legislation in some states that's already been passed where you need parental permission under a certain age. Like that legislation exists. Florida's ban seems to go further and just says if you're under 16, you can't be on it. So it does create an enforcement mechanism. To your point, we don't necessarily know who's going to be involved in that enforcement mechanism, but I would imagine that the company is going to have to at least be able to verify. So like, let's set aside the person who has let's say aside the 15-year-old that has an Instagram account today. At a bare minimum, Instagram is going to have to figure out if you're 15 tomorrow and whether or not you can sign up. Well, if you're 15 and from Florida, and then to take it a step further, you could potentially have a portfolio company that has a social aspect that now needs to figure out, does this apply to me? If so, are you under the age of 16? Are you in Florida? Is it for Florida residents? What if you cross over into Florida and you're a Georgia resident? There's just, as you and I have said many times on the show, it's not necessarily about the harshness of any specific legislation. It's the lack of clarity. And I think you and I both know the chances just to find everything we need to know is very slim.
Well, right. I mean, like my daughter's 10 and, now that we're talking about this, I remember when she signed up for Roblox, I had to set up a parental account.
Right.
And then I had to, if I remember right, I had to set up the parental account and then create the child account for her that she could then log into.
Right.
But at no point did they ever ask for my ID or anything like that. I self-certified all that. I agree that I'm above the age of da-da-da-da. So I think, yeah, I mean, I don't know, like it'll be interesting to see what the language here says. Cause as far as I know, there's no state in the country that allows anybody under the age of 18 to enter into some legal agreement. Like they can't sign an agreement under the age of 18. So, I mean, even if this bill is at face value, like exactly what it seems to be, I don't understand how, like, what document? Sorry, I'm not really articulate today.
You're keying into something exactly. This is where I say the opacity is. This is exactly the issue. I have a 13-year-old son. He doesn't have an ID.
And he has no ID problem.
He has no ID. So like,
right.
How do now my daughter could in theory at the age that she got her learner's permit have had that. But if she didn't have the learner's permit, she didn't have any ID. So now you get into parental certification, which exists today because that exists under COPA. But now you're asking for a different level of parental certification. And again, setting aside the politics of whether you agree with that or don't agree with that, it creates a level of liability, in my opinion, for startups, just like it creates a liability for employers of, okay, do I keep a copy of the ID that they showed me when they filled out their I-9 form? Companies wrestle with this all the time because if you keep the copies of the documents and you're found later to have had bad judgment, you could be liable. And so a lot of companies shred because it's the right policy. With startups now, like, what are you keeping on hand for these people and all that stuff? It just adds another layer of complexity for what are probably some of the more, I don't want to use the word addictive because it's probably the wrong word, but people who are much more likely to consume the content in large quantities. That 14 to 16-year-old, doom scrolling on TikTok or Instagram is also most likely to be the next customer for whatever the next startup is that's building something social.
Right. And then on top of that, on top of that, these rules technically only apply to companies in Florida and or the U.S. It does nothing of the companies that might be based outside the United States, but still used by these same children in Florida. So that's why I kind of was saying earlier, like I don't know that we'll tackle these things, but I think, if we assume that everybody behind the bill had good intentions, just for the sake of discussion,
sure,
then like, we kind of have to go one step further and recognize, like, I don't know that we're really accomplishing anything with this. I mean, you can ban all you want. You can say, oh, nobody under the age of 18 in Florida can, download some social media site, but is TikTok going to comply? Absolutely not. Why would they?
Right. And I think like you bring up this good point about the like how do you enforce this now too? Because I mean, that creates a whole big ball of wax. Is this the police that are enforcing this? Is there a government agency that's enforcing this? This is a very, very complex issue, regardless of the right or wrong of like how old a kid should be when they get on social media. We could talk for, weeks about that. But there's this issue of, startups want to operate in defined environments. And I think this creates a very undefined environment for startups that want to play in a B2C environment where your customer could be under the age of 18.
Well, and the possibility of this regulatory risk or regulatory breach definitely is a turnoff to me as an investor.
Correct.
It's one thing to fund a company with $300,000, which might be, let's call it 12 to 18 months of runway when they're very early stage and they're 2 or 3 or 4 people. It's something else entirely if we now have to recognize that you have to fund them for $500,000 or $600,000 for that same team just because of that potential compliance burden. I think if this goes too far, I think the unanswered questions become sort of a barrier to entry. And ultimately, it doesn't actually protect these children, because the companies outside the jurisdiction of the rules don't have to comply anyway.
Yeah, I definitely think that there are questions about how much can be enforced versus what you described as how much do we need to spend to try to comply with this legislation. So,
as far as I'm aware, I don't mean to put you on the spot, but just now that we're thinking out loud about this, as far as I'm aware, I don't know. I can't think of a single website that is blocked by the government here in the United States, right? Like, does that exist? I don't think that exists.
I don't think so. I mean, I'm assuming I could get to Al Jazeera if I tried, which would be the sort of stuff that you might think that they might, but I don't think there's anything that's officially blocked.
Right.
I mean,
and
China,
so like
China versions of social media, maybe? I don't know.
Right. I mean, I think I just don't get it. It's like, what are you trying to accomplish here? Because we're not going to we're unlikely as a country to become one of those places where you can like block an entire domain or block an entire, product from all users. And even if you did try that, I mean, that's where VPNs come in and all sorts of stuff. So I think coming back to your main point on this, it's the ambiguity of the details here that is the real problem.
Yeah, you mentioned it. Regulatory risk is a real thing. And then on top of that here, it's a different type of regulatory risk than I think we normally refer to. When I think of regulatory risk, I think of things that could prevent you from doing business. Here, the regulatory risk is also one of an execution risk because the regulatory risk at some point will to some level be defined. Don't let kids under 16 under your platform. Okay. Well, what do we have to do to execute against that? And what methods internally do we use to test that we're not doing that? And who's going to test the testers and all that stuff? So there's a level of execution risk that again increases burn, that adds complexity. That if somebody brought me a business today that had a social aspect to it, and that could be as simple as like there's some like group messaging platforms that my daughter uses for her track team, which I think under the way I think this legislation is going to be written could be viable because she can join and talk with other people. I mean, even you use Strata, right? Mm-hmm. You can interact with other people on Strata, right?
Oh, you're talking about Strava.
Strava.
Yes. Yeah, I can like technically, like their stuff. I think I just saw a chat or a messaging feature just got released last week with them too.
Right. I thought I'd heard something like that was coming. So are they social media? I mean, maybe. I don't know. Like, where's the line there? If I can interact with someone else and they can send me porn, I think that qualifies.
Yeah.
And lots of other things that they could send, but just using the easiest example. So does Strava have to be compliant with this now? And does that mean that my daughter, as a 15-year-old runner in Florida, can't use Strava unless she can disable the chat features of the app? It just adds a lot of complexity, not necessarily for founders, because I think excited founders will work on finding solutions. But as an investor, it certainly does make me less likely to want to write the next check into a B2C thing that has some level of socialization.
Yeah. And that is, what we're really talking about here is one of the biggest challenges of government is it's not whatever bill that you want to pass. It's what's at the edges of the bill that you need to really think about. Like in this case, for something like this to really work, the implication is that you have to start issuing IDs of some sort, to people, under the age of 18. And then,
right.
Then you start to push that mental model even further. And you're like, well, wait a second. Like, does a child under the age of 18 need parental consent to get a government ID? And okay, well then if that's true, then what if they don't, it's tricky. That's
a lot.
The scope gets big real fast.
Yeah. So
I think we can all agree, by the way, that we want kids to be safe. I think we can agree to that.
Oh yeah. Amongst all this, I think that all of this has good intentions for sure.
Right.
All right. Well, let's put a pin in it there because we could certainly keep expanding the scope. But any travel for you in the upcoming week? Are you
not in the next week? No. We've got spring breaks coming up, here in a couple of weeks, and Eva being in elementary school and the boys being in preschool have two different spring breaks. So that it's gonna make for some interesting travel arrangements.
Yeah, have fun with that.
But yeah, no, other than that, Lubbock, Texas is the next tour stop. I don't even know what we're calling it, man, but I actually need to text you or email you about this and see if you're coming. But yeah, April.
I'm a definite maybe.
Definite if.
I'm waiting to hear there's a track thing for my daughter. That's supposed to be senior night, but I'm waiting on timing and then seeing if I can take the last flight to Dallas or Houston or something like that and then get up early in the morning and come see you. So if nothing else, not that I don't love you, but if nothing else, Evie Mae's is a great barbecue joint, and I would welcome the opportunity to have another plate of barbecue from Evie Mae's. And I will say, for whatever it's worth, now I'm going to scramble to find the information here as we thread down the last little bit here. But I was told by a listener of the show to make sure that you can't get away with, and he sent me photo evidence. So maybe I'll put this on the next episode because I figured I'd do photos on Miles to Go. But there's, since you appear to have not gotten things right in terms of what you were parked next to the last time you were in Sioux Falls, he wanted to make sure that I pointed out that you did have a flat tire in Lubbock, and that there are pictures of you, which I have here in my Instagram feed from Type A Furniture Maker. I have right here. I have pictures of you. Yeah, I have pictures of you changing the tire. So we'll make sure that gets into a future episode.
I love it.
Just for further proof of how much you enjoyed your time in Lubbock.
Hey, I did enjoy it. And for the record, I don't think I picked up the nail in Lubbock. I think it just so happened that the parking in Lubbock gave the nail time to do its work.
Gotcha. Okay, so somebody else was at fault for the nail, not Lubbock.
It could have been. I'd have to look, but as I recall, we camped at Hot Springs National Park for like a week before that stop.
That sounds right, yeah.
And then cruised west for whatever it was, 12 hours over the course of 2 days to get to Lubbock. And somewhere in that, 600, 800 mile journey, I'm sure we picked something up. But yeah, that was my first experience changing a tire on a trailer, by the way. So
good for you.
The story I'll have to tell you on a future episode, though, is that what happened after Lubbock, because that's the more interesting part.
All right.
But it included me accidentally, potentially, almost throwing myself and Dana off the side of a hill with the trailer in Big Bend National Park, followed by breaking down and having to park at some lakeside stop in Texas because of the damage that was incurred. So
I remember.
Story for a different time.
I do remember this. Yeah, and we do need to do that story for another time. But all right, well, I think that's a good place to pin it for the week, man.
All right. Well, good to see you. I should ask you. Are you traveling this week, or what are you doing?
I think I have a week off. But probably back to back after that. So
I love it. All right, man. Well, good seeing you, and I will keep my fingers crossed that your definite if for Lubbock turns into a definite yes. We'll see.
We'll work on it later.
All right, buddy. We'll see you soon.